So, Greg, recently Fox Business had you on air on TV talking about Hurricane Florence. Now, you live in the Carolinas. Y'all were hit pretty badly. Hurricane Florence caused nearly $5 billion in damage to homeowners. Obviously, there's long-term impact and short-term impact for this for both homeowners and potential investors. And I think this reminds me very oddly of the conversation that you and I had about Houston a long time ago. Maybe not a long time ago, maybe earlier this year, and when they were hit with the major flooding, et cetera. Tell me, how did that interview go? What were some of the things you talked about?
Well, I'm glad that you brought up Houston because that was kind of the basis. The interview was two-pronged. They wanted to know what the short-term impact of a hurricane is on homeowners and people. I think everybody pretty much has a pretty good handle on that. You know, it ranges from catastrophic, but in this case of Florence, it wasn't catastrophic for very many people at all, meaning loss of life or injury. It was super inconvenient for a lot of people in terms of having their houses flooded. One of the things about flood insurance is that it turns your life upside down when your house gets flooded. But if you've got the insurance, you've got time to deal with it. But what's funny was that there's a tone about investors coming into the market. I made the point that insurance companies are going to write checks, the government's going to write checks with federal aid, and investors are going to converge. And I get the fact that people view that sometimes as kind of like vultures swooping in, and that's fair. But on the other hand, I know what investors do in these situations. They come in and say, here's a check. And you're not obligated to take that check. But there are a lot of people that are saying, okay, all my stuff was in there. I've got the photo album. I've got the kids and the dog. Really, the important stuff is in the minivan.
That's right.
Let's get out of here and go to my sister's place. Spend a little time there. My boss is going to give me time off. Let me get out of here. And whatever insurance I have, whatever, somebody's going to give me $75,000 for the house, but the house was worth $150. But you know what? I'm taking my $75 and I'm going. It's until you take the check, the investors had no impact on you, and all they've done is given you an option. And so
that's right.
They're motivated to fly in there. I always laugh. We get such a bad rap, like you see the news after a natural disaster, and there are guys out there and girls with trucks loading up debris. And they don't have FEMA jackets on. And they're not the homeowners. There's like 6 dudes that are all up there carrying wood out of somebody's lot. And it's like, that's an investor who bought that property. Those people are being paid to be there by an investor who is coming in and providing, at the end of the day, an option for people. And so I think everybody gets a good handle on the short-term impact. The interesting thing, and you'll like this because we talk a lot here about smart people saying dumb things about real estate. And one of the dumb things they say is how no matter what happens, it's going to be catastrophic, no matter what, right? And I'm not saying that Neil Cavuto from Fox was being dumb because he didn't put it this way. He said, what is the long-term impact? There are people who are concerned that this could kind of like ruin the housing market for some extended period of time. And what happens after a hurricane? How long does it take for a real estate market to recover? And that's where Houston comes in. Houston, we've talked about because, number one, they got hit and they were predicted as being in big trouble back when the oil industry saw plummeting oil prices, i.e. the oil industry was going to be less profitable. There was going to be predictions of a lot of job losses. Everybody assumed that Houston was going to be ruined for a generation, and nothing bad happened at all. That wasn't even their number one job category. But then a couple of years later, 2017, they get slammed by Harvey, right? Harvey comes in and floods, like 157,000 houses were flooded. Huge damage to the market there. And that was that was late summer 2017, if my memory serves. And then 2018, Houston recorded the highest home sales ever and the highest home prices ever. So the two indicators that basically indicate a healthy market, people are buying and they're paying even more for the properties. That's all taking place in Houston 1 year after Hurricane Harvey, which was much bigger. In retrospect, we now know it was much bigger than what happened in North Carolina. So my point was real simple. It's like you have enough, when there's a hurricane bearing down and the media has an attitude these days of, like, the Weather Channel should be called the bad weather channel because all they wanted to talk about was the bad scenarios. And I get it. When you're predicting a hurricane, you want to give the worst case scenario, make sure everybody gets out of harm's way. But they went too far. They were still trying to predict it was going to be disastrous after it had passed, right? So people have enough to worry about. They're worried about their family. worried about their possessions and their home and their business and everything else. What they don't have to worry about is the housing market collapsing because of a hurricane, because it has never happened. Even Katrina that nailed New Orleans took a long time to come back. It came back. But you name a hurricane, Sandy, Jersey came back. Okay, the Jersey Shore came back.
That's right.
Rita, whatever hurricane you name, I'll show you a real estate market that rebounded because the fundamentals, and this is the money line really, that when that hurricane was coming in, while Neil was interviewing me and the hurricane was still out in the Atlantic, it just so happened that it was actually directly above the Gulf Stream, right? The Gulf Stream, that current that goes up across throughout the Atlantic Ocean.
Mm-hmm.
And it makes a great analogy because on the surface, if you're in a rowboat on the surface, there's no more powerful force of nature than that hurricane, right? It's knocking you upside down. It is violent. It's terrifying. But go 100 feet deep and you know what you have? You have the Gulf Stream and it's just chugging along.
Yeah,
right?
It's the exact same thing. Right.
Yep.
It's not going to change.
Slow down a little bit.
All going to be
actually
there.
Exactly. And I learned from researching this that the Gulf Stream actually can slow down because of hurricane activity for a couple of days. And then it goes back to being the Gulf Stream again. And that's my analogy, is that the housing market is so deep. Property rights in our country are so real. Demand to live in this country is so real. The population migration trends, the long-term prosperity of the country, that's what you're buying when you're buying real estate. You're betting on population demand going forward, which means success and prosperity in the country no matter what. And it always has been there. And so there can be a hurricane on the surface, but the Gulf Stream still moves in the direction it was moving. It still is going to get there when it's going to get there. And the same thing for the housing market. So folks can worry about the roof flying off, but don't worry about the value of their property plummeting and staying down for any kind of serious period of time.
I think this is also very analogous to the stock market, right? Like if prices are down and you sell, then you're taking a loss. But that's an option that you have to sell. Very similarly here, if an investor says, well, we see your property's worth 150, pre-hurricane, post-hurricane, it's worth 75. Here's a check. It's only an option. Should you choose to do so, you definitely have an option of staying there, working with the insurance company, repairing your property, and you're better for it, right? No big deal. But let's definitely not forget about the fundamentals of these cities that the hurricane passed through. That's never going to change.
Yeah, no doubt. And think about this. There are a lot of people that were on the coast that had those very acute concerns on their mind of their houses being washed away. Then there were folks that were miles away that had a pretty good idea. Like I'm in Western North Carolina. I'm in Charlotte. Okay, so I was 6 hours drive from the coast, and we never really thought it was never predicted that we would have anything but a lot of rain and maybe some flooding. Right, the winds weren't going to be a problem by the time they got here. But I did hear people lay out innuendo. Right, people in media saying, what are the long-term implications of a hurricane system like this, and will the Carolinas ever recover? And I'll be honest, I didn't see anybody come straight out and predict a housing collapse, but they were hinting at there being a longer term implication than there would have otherwise been. And so there were people that were not really in any kind of danger that were still worried. They were still worried because what does it mean when my life gets interrupted by this hurricane? And I just want people to know that it's a very, very crystal clear example of when you're owning America, when you're investing in real estate. It's a tangible asset, and even the asset, make sure your insurance is up to date, right? Make sure you have the right coverage. Think Realty is aligned with an insurance company that will make sure, National Real Estate Insurance Group, that will ensure you have the right coverage. So if disasters does hit, you don't have a financial disaster, you have an interruption of service. But don't, it's like one of these things where it really is as good as it sounds, that you are owning something that is the most powerful asset you could ever own. It generates income and it appreciates and it fends off violent storms and everything else that comes its way.
Right. To piggyback on that, the long-term impact, one word, recovery.
Right.
And stability, because real estate in America is not going anywhere.